The best way to predict the future is create it. That's a quote by Peter Drucker. Time is precious, time is... And this is the Time Monitor on Atlantic Television Network. Good day, viewers, and welcome to a fresh episode of Atn Business on Atlantic Television Network right here in the city of Port Harcourt. This is the network's medium bringing the happenings in the economic sector of society to our discerning viewers. This program is aimed at bringing to the doorstep of viewers the business, financial from all strata of society. Its delivery is accentuated through the various stock exchanges across the world, news about government economic activities, private sector business activities, list to the expert opinions, stakeholders analysis, and correspondent reports. Headlines: BBN NIN requisites for $500 million bond subscription. Togo, Benin owe Nigeria $14 million. International brewery shared listing boosts cap by 599 million naira. Stocks move higher due to September cuts. By the end of the show, you can be rest assured of being informed accurately of financial activities around the world. I am your host, Wendy Aguma. We'll take a short break, and when we return, we'll reel out the details. Don't go anywhere. Welcome back. Now let's go into market reports, local and international business news for today. Federal government has said that investors seeking to invest in its latest financial instrument must disclose specific identification requirements to participate in the exercise. It disclosed this in a frequently asked questions document provided by the Debt Management Office of its website. According to the FAQ, all Nigerian citizens, including those residing abroad, must possess a bank verification number and a national identification number to subscribe to the domestic dollar bond, which was issued on Monday. The bond, part of a broader $2 billion program, is issued domestically as the government seeks $500 million from local and foreign investors in this first tranche. Eligible participants include Nigerians resident in Nigeria, those in the diaspora with foreign exchange savings abroad, and foreign institutional investors. The FAQ from the DMO also clarifies that subscriptions to the domestic FGN US dollar bond cannot be made by cash. Instead, all payments must be made through electronic transfers into designated accounts. According to the FAQ, subscriptions to the bond can be made electronically or through financial institutions. Also, for those intending to use balances in their domiciliary accounts for subscription, the funds must have been in the account for at least 30 days before the application date. The bond will be used to finance critical sectors of the Nigerian economy as approved by the President on the recommendation of the Minister of Finance and Coordinating Minister of the Economy. At a 9.75% per annum coupon rate over a 5-year tenure, the bonds are targeted at both domestic and international investors with a minimum subscription amount of $10,000. This bond differs from traditional Euro bonds primarily in accessibility, as it has a lower entry threshold of $10,000 compared to the typical $200,000 required for Euro bonds. It also meets the Central Bank of Nigeria's criteria for liquid assets, making it eligible for inclusion in banks' liquidity ratio calculations, and is also suitable for pension fund portfolio. Federal government is planning to invest $100 billion annually to tackle the economic challenges in Nigeria. The Minister of Budget and Economic Planning, Atiku Bagudu, declared on Wednesday. Bagudu also said the recent nationwide protest against the bad governance in Nigeria has forced government officials to listen more and do better. He said, though the current economic situation is due to cumulative years of underinvestment, the current administration is ready to rewrite the wrongs to improve the country in the next 25 years. This came as the Chief of Staff to the President, Femi Gbajabiamila, has said the country was battling various socio-economic challenges that threatened the existence of a national union. The two government officials spoke at the National Economic Dialogue 2024, organized by the Nigerian Economic Summit Group on Wednesday in Abuja. The event, attended by leaders, policymakers, experts and key stakeholders under the theme Nigeria's Economic Future, 25 Years of Democracy and Beyond, was to reflect on the nation's economic journey since the return to democratic rule in 1999. In his address at the event, Bagudu revealed that the federal government was targeting $100 billion annual investment to boost the Nigerian economy. The minister further highlighted the root cause of stunted national growth, noting that more public funds were needed to address the country's priorities. On his behalf, on Pat, the chief of staff to the president, Bajabi Amila, sought strong collaboration with the government. The Minister of Finance and Coordinating Minister of the Economy, Mr. Wale Edu, said the country must continue to strive and remain on the path of prosperity to achieve the necessary results. He said that in 25 years of democracy, the country is still trying and must remain on the path of growth. Ogun State government has commenced the disbursement of $500 million soft loans to artisans and traders across the state. The state governor, Dapo Abiodun, who had announced the scheme earlier, said the soft loan tagged Okowo Irinse Dapo would be given to traders and artisans within 30 days after modalities had been worked out. The governor also announced the disbursement of grants and subventures to community development associations in area, zonal and senatorial development communities across the state. Commissioner for Insurance, Chief Executive Officer of the National Insurance Commission, Olusegun Omosehin, has revealed that there are some ailing entities in the sector that the regulator is managing. He said this on Wednesday at an interactive session with journalists in Lagos. There have been reports recently about the policyholders not being settled as of when they were due. The CFI added that they were working on the legal framework that would enable the Commission to take action and not be challenged in court. On the issue of recapitalization, which has been a topical issue in the country, the CFI disclosed that the Commission was still engaging stakeholders to arrive at the minimum capital requirements. The Insurance Reform Bill 2024 has passed a second reading in the Senate, and it seeks to increase the capital base for operators in the industry. Moribund Ajokuta Steel Company Limited risks being disconnected from the power grid over its failure to pay the 1.27 billion naira electricity debt it incurred in the first 3 months of the year. Described as a special customer, the Nigerian Electricity Regulatory Commission disclosed that Ajokuta Steel Company and the host community did not make any payment towards the 1.27 billion naira Nigerian Bulk Electricity Trade PLC and 0.09 billion naira market operator invoices received in January, February, and March 2024. The regulator expressed displeasure that the trend of non-payment by the steel company had continued for a long time. It added that the federal government had been urged to intervene to avoid total disconnection from the grid. In January, the TCN disconnected ASCL from the national grid as the Moribund company failed to clear a debt of 33 billion naira owed to the NBET and service providers. The 33 billion naira comprises The 33 billion naira comprises 30.85 billion naira for energy and capacity delivered by NBET and 2.22 billion naira owed to service providers. It was later disconnected after various interventions from the government. At the time, the federal government said it would investigate how a non-functioning company accrued 33 billion naira in electricity debt, which prompted the TCN to disconnect it from the national grid. The Minister of Steel Development, Shaibu Audu, had expressed surprise at how the company accumulated such debt in electricity consumption when it had not been operating at full capacity. He added that the federal government would not allow this agency, NBET, to hinder the effort to revive the steel company, which had been out of operations for about 45 years. The 24-hectare steel mill in Kogi State was incorporated in the 4th National Development Plan before it was abandoned by the Muhammadu Buhari military regime in 1984. It is considered the largest steel complex in sub-Saharan Africa. For more than 4 decades, the company has remained static except for the epileptic operation of the light mills. The efforts by the government to revitalize it have not succeeded. At an April interactive session with the House of Representatives Committee on Steel Development, the minister stated that Nigerians' annual steel imports were valued at $8 billion. None of the 4 international bilateral customers being supplied by the power generation companies in the Nigerian electricity supply industry made payments against the cumulative invoice of $14.19 million issued by the market operators for services rendered in the first quarter of 2024. The Nigerian Electricity Regulatory Commission revealed this in a report cited by our correspondent. The foreign companies are Para SBE in Benin Republic, $3.15 million, Transcorp SB in Benin Republic, $4.46 million, Mainstream NIG LEC in Togo, $1.21 million, and Odukbani CEET in Togo, $5.36 million. NERC added that no remittances were made by bilateral customers within the country against the cumulative invoice of 1.86 million naira issued to them by the market operator for services rendered in Q1 2024. It, however, noted that some bilateral customers, both local and international customers, made payments during the quarter for outstanding market operators' invoices from previous quarters. Cumulatively, a total of $5.96 million was paid by 2 international customers. Similarly, the market operator received $505.71 million from 8 local bilateral customers as payments towards debts that were incurred pre-2024 first quarter, the report stated. The Commission said it was expecting the market operator to invoke the provisions of the market rules to curtail what it called a payment indiscipline being exhibited by local and international bilateral customers. In May, it was reported that international consumers failed to remit about $51.26 million to Nigeria for electricity exported from Nigeria to power users in 2023. The federal government revealed this in the industry data showing the non-remittances by customers. Also, the bilateral power consumers did not remit about 7.61 billion naira to the Nigerian power sector in 2023. NERC condemned the development, describing it as payment indiscipline that must be curtailed by the market operator as the arm of the TCN, which is a firm in charge of Nigerians' power exports. An analysis of the government's industry data indicated that the international consumers failed to remit $16.11 million, $11.97 million, $11.16 million, and $12.2 million to Nigeria for the electricity exported to them in the first, second, third, and fourth quarters of 2023, respectively. MBH Power Limited has disclosed it has generated a total of 9 megawatts of electricity using compressed natural gas. The director of MBH, Rakesh Mahapatra, stated that the company generated 7 megawatts in Lekki and 2 megawatts in Ikorodu, all in Lagos State. Mahapatra spoke recently when he received the Minister of Power, Adebayo Adelebu, at the MBH meter factory in Mowe area of Ogun State. According to Mahapatra, the energy firm has also provided solar solutions for customers in Lagos, saying it has installed a 1 megawatt solar plant through its subsidiary company in India. The director told the minister that MBH Power was a total energy solution providing company established in 2000 in Nigeria, having ventured into generation, transmission, metering, and renewables. Since 2003, the company was said to have handled over 400 substation projects owned by the Transmission Company of Nigeria, saying all were completed. Aside from supplying transformers and building substations, the MBH boss disclosed that it had completed the construction of many distribution lines under the NIPP and TCN. He also said the meter factory in Ogun State was established in 2019 with an annual production capacity of 920,000 prepaid meters. Asked why the cost of prepaid meters keeps rising, Mahapatra told our correspondent that this was a result of the rising foreign exchange rate. The Power Minister, Adelebu, said he was pleased with the activities of MBH, promising that the federal government will partner with it to provide solutions to some of the challenges facing the sector. Number of metered electricity consumers in Nigeria increased by 48.5% between 2019 and 2024. The National Bureau of Statistics has said an analysis of data from the NBS and An agency of the federal government showed that in 2019, the number of metered consumers nationwide was 3,976,940. This increased to 5,907,644 in the first quarter of 2024, representing a 48.5% growth over the 5 years. The Bureau said metered power users in Nigeria increased from 3,976,940 in 2019 to 4,138,043 in 2020. 4,773,217 in 2021, 5,125,009 in 2022, 5,605,842 in 2023, and reached 5,907,644 in the first quarter of 2024. This represents 4.1, 15.4, 7.4, 9.4, and 5.3% growth respectively. Experts note that this growth is metered consumers is a positive development for the electricity sector, as it indicates a reduction in the number of consumers on estimated billing. The Bureau, however, stated that estimated electricity billing increased by 11.6% during the review period. The increase in estimated billing raises concerns about the accuracy of electricity billing and the need for more metered connection to ensure fair and transparent charging. Executive Secretary of the Nigerian Extractive Industry Transparency Initiative, Dr. Obonnaya Oji, has said that the continued loss of revenue in the oil sector due to oil theft, corruption and vandalism has affected investment opportunities. He also said Nigeria would require huge investments in the coming years to meet its energy transition targets. Oji spoke in Abuja on Wednesday when he received the Ambassador of Belgium, Mr. Pieter Lengertz, the High Commissioner of Australia, Ms. Leilani Ben-Judah, and the High Commissioner of Canada, Mr. Jamie Christophe, at Naty House. He pointed out that with the federal government's decision to use natural gas as a transition fuel, about $20 billion annual investment will be needed in the next 10 years to develop gas infrastructure. Oji, however, stated that for this goal to be achieved, the industry must rid itself of the current challenges of corruption, oil theft, illegal mining, stealing of Nigerians' precious minerals, and pipeline vandalism. In their separate remarks, the envoys pledged that their support to Naty and the wider stakeholders community in Nigeria to promote transparency in the extractive industries. They also welcome newly completed data center project of the Naty as a significant milestone in the fight against corruption in the extractive industry. According to reports, Dangote Petroleum Refinery is reducing its importation of crude from the United States, taking more of Nigeria's oil for processing. The report stated that the 650,000 refinery is set to import just over 4/5 of its feedback from domestic resources in the third quarter. That compares with less than 3/4 in the prior quarter, according to tanker tracking data and information from traders. It was learned that oil prices were pressured last month on reports that the plant planned on reselling some of the U.S. barrels it previously purchased, underscoring the pivotal role Dangote already plays within Atlantic Basin petroleum markets. The refinery's effort to dial back overseas crude purchases potentially leave more U.S. export barrels competing for buyers elsewhere. Atn reported earlier that the federal government will start selling crude in a local currency to Dangote from October 1st. It is not yet certain how much supply will be traded under the system, but if the 450,000 meant for local consumption is exhausted, the process could leave Dangote requiring hardly any crude overseas. The $20 billion Dangote refinery in Lekki, Lagos, has taken in more than 56 million barrels of crude since December as it completed test runs and gradually lifted processing. Of that, 78% has been local supply. It took 6 cargoes of crude directly from the Nigerian National Petroleum Company Limited for next month, a company spokesman told Bloomberg earlier this month. Most Nigerian cargoes are about 12 million barrels each. A further 2 shipments from Nigeria, as well as 2 million barrels to WTI Midland, are slated for September arrival. The tanker tracking data show. The plant would have taken in an average of almost 10 million barrels per month in the 6 months through September. Influence of America Inflows of American feedstock have been expected to increase significantly earlier in the summer. However, some of the U.S. barrels it bought for this month and next were being resold, a claim that was debunked by the refinery in late July. It also scrapped 2 tenders in which it had been looking to purchase a further 6 million barrels of American crude for September, according to traders. The changes may also leave fewer Nigerian barrels on offer for sale in Europe and Asia. Dangote's petrol is expected in the market by September. We are open for advert placement, bookings, and commercials. And you can connect with us and watch us on ATN socials, Facebook and YouTube, Atlantic Television Network, Instagram and TikTok, Atlantic TV Network 1, X formerly Twitter, Atlantic TV Net. Watch us live on our website, atlanticnetwork.tv. Nigerian stock market capitalization increased by 599 billion naira following the listing of new shares by International Breweries PLC. The market capitalization settled at 54.047 trillion naira at the closing of trading. In a statement filed on the exchange website and issued by the head of the Usual Regulation Department, Nigeria Exchange, Gostime Iwenekai announced the listing of 141.43 billion ordinary shares of International Breweries at 3.65 naira per share. The shares were the brewery's right issued offering of 1.61.17 billion ordinary shares, which was 87.75% subscribed. With the new listing, the total issued and fully paid up shares of the international breweries have risen from 26.86 billion to 168.29 billion shares. Meanwhile, the all-share index dipped slightly by 0.07% to close at 95,831.51. .51 points, moderating the year-to-date return to 28.55%. The market breadth was positive as 27 stocks recorded gains against 18 decliners, reflecting sustained investor interest in selected equities. At the close of trading, Ikeja Hotel surged by 10% to close at 7.70 naira. Alti Bristol gained 9.76% to settle at 2.25 naira, and Cortex PLC advanced by 96% to close at 3.18 naira. On the flip side, UPL led the losers chart with a 9.40% decline to close at 2.41, followed by Oando, which dropped by 8.66% to 39.55 naira, and National Salt Company down by 8.39% to 32.20 naira. The trading session recorded a total of 360.56 billion shares exchanged in 8,813 deals, corresponding to a market value of 7.25 billion naira, representing a 64% decline in volume and 6% dip in turnover. Oando led in volume with 66.2 million traded shares, followed by Guaranteed Trust Holding Company with 45.7 million shares and Cortex with 29.4 million shares. Atn reported that the Nigerian equity market gained 667 billion naira on Tuesday after 6 consecutive days of losses. As part of efforts to enhance the development of the eastern ports, the Nigerian Ports Authority said it will commence the implementation of the electronic call-up system at the Onne Port Complex, Rivers State, by September. The Managing Director of MPA, Dr. Abubakar Soho, who stated this on the authority's X-handle recently, noted that the Federal Executive Council had approved the implementation of the electronic call-up system at the Onne Port Complex as part of its broader efforts to streamline operations at one of West and Central Africa's largest oil and gas logistics hubs. He emphasized that the initiative aligned with the Minister of the Federal Ministry of Marine and Blue Economy, Adeboyega Oyetola's directive to have the system operational before the end of this quarter. During a pre-implementation visit by the executive teams of Call-Up Technology Services Limited and Forge Concepts Limited, the operators of the electronic solution, Dasoho, expressed the MPA's commitment to expediting the automation of truck traffic at Onne, Port Harcourt. He said the electronic call-up system was expected to seamlessly integrate into ports port community system, and the forthcoming national single window. Datsuho also highlighted the importance of structuring the information technology deployment in a manner that supports sustainable energy use. He noted that the Onne Port Complex, which includes the Federal Ocean Terminal and Federal Lighter Terminal, had seen a significant surge in vessel and cargo traffic in recent years. Dansoho, who previously served as a port manager for Onne from 2020 to 2021, was credited with spearheading innovative investor-friendly initiatives that have contributed to the year-on-year growth and success recorded at the port. He said as the NPA continued to modernize and expand its capabilities, the implementation of the electronic call-up system was expected to further enhance operational efficiency and cement Onne's port status as critical logistics hub in the region. You are watching Atn Business on Atlantic Television Network. We will be back after this break.
fuel issue.
Welcome back to Atn Business and Atlantic Television Network. Now to the rest of our stories. European stocks move higher on Thursday as investors suggested the Federal Reserve's latest comment on the future path of interest rates. The prime European stock 600 index was up by 0.47% by 11:45 a.m. London time, with all major bourses and most sectors in the green. Retail stocks added 1.35%, while mining stocks fell by 0.75%. Shares of Swiss Re rose 3.16% after the issuer reported a 16% rise in the first half net profit to $2.09 billion. Meanwhile, Aegon shares fell 5.85% after reporting a net loss of 65 million euros, $72.41 million. The British bond, meanwhile, jumped to a 13-month high of $1.3127 after fresh data showed an increase in the UK business activities. Sterling was trading at 1.3119 by 11:41 a.m. London time, its highest level since July 2023. Corresponding PMI data from the Eurozone also showed an uptick in business activity over the month, even as wage growth eased, paving the way for a potential September rate cut from the European Central Bank. It comes after Fed minutes release Wednesday showed that officials have moved closer to a longer-awaited interest rate cut during their July meeting, with the vast majority of participants agreeing that a reduction was likely come September if the data continue to come in as expected. U.S. stock futures were marginally lower Thursday morning as investors looked ahead to Fed Chair Jerome Powell's speech at Jackson Hole, Wyoming on Friday. In Asia, markets were mixed as investors suggested business activity data from Australia and Japan and awaited PMI numbers from India. Greek-flagged oil tanker was left abandoned, adrift and ablaze in Red Sea following strikes off the Yemeni coast. The UK Maritime Trade Operations Agency on Wednesday reported that a fire had erupted aboard a tanker, which lost engine power and was no longer under command. It came after a gunfire attack from two small boats roughly 77 nautical miles west of the Yemeni port Hodeidah, which is under the control of the Houthi militant group. The UKMTO did not name the vessel or the perpetrators of the incident. Greece's shipping minister Christos Stylianides later named the vessel as oil tanker Sunion and condemned the attack as a flagrant violation of the rules of international law and a serious threat to the safety of international navigation, according to a Google Translator statement. All 25 crew members of the vessel are safe, the minister added. The vessel is part of the fleet of Greek operator Delta Tankers, which confirmed the Sunion suffered minor damage after being involved in a hostile incident in the Red Sea in an email statement. The company later issued a statement that the minister and crew aboard the Sunion have evacuated the vessel and received naval report. Separately reported that the crew was rescued by the EU's naval mission upsides, which confirmed the retrieval in a social media post. The Sunion had last called at Iraq's crude loading Basra terminal, according to marine traffic data. The airspeed mission said that Sunion was carrying 150,000 tons of crude oil and now represents a navigational and environmental hazard, likely in the event of an oil spill. No group has claimed responsibility for Wednesday's attack so far, although the Houthi faction has carried out swathes of similar strikes against commercial ships, citing solidarity with the Palestinian cause amid Israel's ongoing military campaign in the Gaza Strip. The Yemeni group previously claimed only to be directly targeting ships owned by or linked to Israel, the US, or the UK, but has repeatedly attacked vessels that were not connected to these nations. The Houthi offensives, which have so far caused at least 2 ships to sink, have disrupted a critical trade route linking Europe and Asia Pacific, with several vessels opting for a lengthier Cape Horn route that can add up to 14 sailing days to the journey. The disruptions have not led to the suspension of westward shipments from the oil-rich Middle Eastern region, nor caused a long-lasting premium on oil futures prices. Independent Petroleum Producers Group IPPG has warned against being forced to sell crude oil to Dangote Refinery and other local refineries in Nigeria. IPPG produces about 30% of Nigeria's crude oil and called on the Nigeria National Petroleum Company Limited to redirect its allocated crude oil volumes to local refineries. Meanwhile, modular refinery owners warned the federal government against ignoring them while selling crude oil to the Dangote Refinery. The publicity secretary of the Crude Oil Refiners Association of Nigeria, Eche Idoko, expressed concern that the federal government had sidelined modular refineries in the arrangements. This dispute highlights the challenges in Nigeria's oil and gas sector, with producers and refiners having different interests and concerns. The federal government's decision to sell crude to Dangote Refinery in Naira has been welcomed, but the sidelining of modular refineries has raised concerns about monopoly and unfair treatment. To discuss this matter, I have with me here in the studio the Chairman, Board of Trustees, South Chambers of Commerce, Dr. Billy Gillis-Harry. You're welcome, sir.
Thank you so much. Good afternoon, Nigeria.
Okay, let's go right into the conversation. So what is the main reason behind the PMS retailers' reluctance to supply local refineries, and how can these concerns be addressed?
Well, I'm surprised to hear that the modular refineries and other refineries are not involved, included in the Naira purchase instruction by the President of the Federal Republic of Nigeria. I think maybe it's something that we don't need to assume. We need to dig deep into it and encourage the regulators and those who are responsible for actualizing that policy to ensure that all refineries, the Nigerian government-owned refineries, the modular refineries, and Dangote refinery is also benefiting from this Naira sales order.
Okay, now the challenge is not just about the modular refineries, it's also about the retailers having a challenge or being reluctant to sell to local refineries. What exactly is the challenge?
Well, I don't think it's the retailers. I think maybe it's the producers, the independent producers. The independent producers obviously have their own business arrangements. They didn't just go into the fields to produce. Production goes through acquisition of assets, goes through seismic research, then goes through exploration before production. And so there are, various levels to that and so much financial involvement. So of course that is not what one individual can do. So if the company has already made some kind of transactional commitments, it becomes very difficult. But this is why we advise that the Nigerian government should think out of the box and come up with a new proposal on how the local refineries' crude oil supplies could be addressed. Because it's our country and we know what we want to work for us. And so there are rules that we need to be able to set up and see if they will work for us much better than just kowtowing with international organizations like OPEC and the rest. So the independent producers will have their own challenges, and I think that's why they are coming out early to say, look, don't force us to sell in Nigerian Naira, because we have made expenses, we have to recover them, we have obligations also. So I think that could be the reason.
So that takes me to my next question. What are other alternative solutions, arrangements that local refineries can explore to secure a steady supply of PMS, seeing we are having a challenge with the retailers?
Again, I think it's the producers we are talking about, because the retailers, like us, we do not have any disagreements. We're only going to be retailing what we have, with either what we get from the refinery or what we get from the licensed importers. And of course, you are hearing quite a lot of different stories that's coming up with NNPC Retail and the rest of them. For me, what I will advise is that there should be a new template on how crude oil production should be tailored to serving the in-country values. And that could mean a new policy on crude oil production that will even affect our gas production and sales contract. Other than that, we just need to advise some of the refinery owners to come up with ideas of also bidding for the acreages, hopefully get allocated, a very high yield producing fields that could be able to, serve the need for their local refining requirements.
Won't that be a little expensive for them?
Well, it will be expensive, but it will not be more expensive, because if you can invest tens of billions of dollars in a refinery, you can as well also be part of the production sharing contract and also get crude oil that you can directly, serve on your refinery. And I think that could have been one of the business cases that should have been made while applying for the license for refineries.
So this reluctance we're having with the retailers right now, how will this impact the operations and sustainability of local refineries, and what are the potential consequences for the economy especially?
Well, I think the independent producers have just made a point. They've made a point that needs to be addressed. The federal government and the ministers of oil and gas and the NNPC, that's the major shareholder of all of these assets, should, call them to discuss the terms that will make it work. I mean, there is nothing that is locked in stone. It's not cast in stone. It's our country, like I said. It's very important that we have our local needs, met, and so it's very, very critical that their complaints should be looked into and solutions should be found.
So what role can the Chambers of Commerce play right now in facilitating dialogue between PMS retailers and local refineries to resolve this issue we are having on ground right now?
Well, the independent producers, some of them are members of our chambers.
Okay.
And we can play a very critical role in ensuring that our regulators, our policy formulators, our policy implementers, and also the companies should be able to sit down. So I think that the National Chamber of Commerce, headed by Otumba Deloye, the regional chambers, especially the one in the south, headed by Honorable Ndutumi Komunibo, where I serve as the chairman of the board of trustees, can start a process where we can be able to work out a method of bringing everybody to the table. And that would be a good idea to start. So
we're hoping that idea comes to the table.
Well,
so we can bring everyone together.
We've started discussing it from here.
Okay.
Because this is the benefit of the media.
True.
Because the media also has to bring in ideas of how solutions could be found. So we were probably not thinking about that, but now that the issue has come, I'm sure that the national president of NASIMA and the regional president of COSIMA will look into it, and also the Port Harcourt Chamber of Commerce that is headed by Eze Mike Elechi and his team should be brought into the picture so that we can get answers to solve some of our local problems.
Okay, for time's sake, let's move on to the next one. Port Harcourt Refinery, Nigeria's oldest and largest oil refinery site, is undergoing a $1.5 billion rehabilitation and upgrade. The project approved in March 2021 aims to restore the refinery to 90% of its design capacity by the end of 2022. Well, we are in 2024 now. The refinery complex, comprising a 60,000 barrel per day old refinery, and 150,000 MPD new refinery, has been operating below capacity due to inefficiency and lack of maintenance. The upgrade is expected to be completed by 2025 to reduce Nigerians' reliance on imported refined petroleum products. Now, considering the fact that the dates have been moved, or we're going to start today, we're going to start tomorrow, the question is, what is the current state of the Port Harcourt Refinery Rehabilitation Project right now?
Well, from our private sector organization's point of view, we have done the little bit we can to be able to encourage the system to ensure that the refinery is activated, is completed, and is producing commercially to ensure that our economy is stable. being that almost everything we do in Nigeria, we are dependent on fossil fuel consumption. We run our power through petrol and diesel, and then we run our vehicular needs to do our various businesses day by day. Transportation, that is very critical in growing the economy, depends on these petroleum products. So we as private sector organizations have, collectively look at the values that these assets will bring when they're operational. And for that reason, we've been in the forefront from the patron point of view, from the IPMAN point of view, and also from the chamber's point of view, to see, how we can be able to encourage the president, the ministers of petroleum and gas, the group CEO of NNPC, all other, officers, especially the managing directors of our local refineries. We have done the little we can to encourage them. And from our investigation and interaction with them, we've seen that quite a sizable work has gone into, into these refineries. And so we're expecting any time, from now that the refinery will roar into life and commercial production should begin. We did this discussion, I guess, about 2-3 weeks ago. And we came out one morning to hear that the refinery will not be activated again by the group CEO. But just only a few days ago, our position as private sector has been vindicated by the presentation that was made by NNPC itself, stating that the refinery will roar into life in September. But we do not want to beat our chests and say that will happen. But the fact that we know that the refinery's rehabilitation has gone far, we verily believe that Nigeria's in-country refining capacity will soon roar into life.
Okay, with the continuous postponements and delays in the functioning or roaring to life, using your words, of this Port Harcourt refinery, I want to know, what are the biggest challenges that have affected or that are responsible for these delays, and have they been addressed? Now we have September as a new date. Have these challenges been addressed? What are our hopes that it will really roar to life by September?
Well, I think those who are saddled with responsibility of technically making these refineries to come alive, and also the amount of money that's also been invested, that is taxpayers' money, should be a reason why those who are saddled with that responsibility should make sure that September should not be changed again. Because there is nobody that has forced NNPC to come out with the dates prior to now, or the ministry. And for us as private sector, we were very certain of what we saw, that the refineries rehabilitation had gone far, and it was changed. Now it has been changed to September. We want to advise that the September date should be kept. There should be faith kept with the Nigerian people in that September projection. But they didn't give a specific date in September, don't forget. Yeah. So let's see how it works.
Okay. Then again, earlier from my earlier introduction of this conversation, we got to understand that the Port Harcourt refinery was functioning at 90% capacity. It was not able to function at complete 100% because of maintenance and inefficiency. So I'm wondering where we have such challenges, and how long will it take before this Port Harcourt refinery begin to function at the 210,000 barrel per day production capacity?
Well, I will really be surprised if the refineries at any time, even as late as 1995, as early as 1995, if the refineries was functioning at 90% capacity. I doubt that very much. But let us, be positive in the expectation that the refinery will roar to life, and at least it can be giving petroleum product to Nigerians use every day. So whether it's operating at 90% or 100% or 50% or 30%, I don't think we should worry ourselves about that. The other thinking that we are coming up with is that government should not be in the business of managing those refineries. And the private sector should come in and partner with them. And we have offered several times as an organization that we want to be in the play because we know what benefit Nigerians will have if the refinery is functioning at the full 100% capacity, or even at 70% capacity.
Okay, so we are meant to understand that Nigeria consumes about 600,000 barrels per day in PMS. Now we have three major refineries, in government-owned refineries in Nigeria. You have Port Harcourt, we have Warri, we have Kaduna, and then we have the Dangote refinery of 650,000 capacity. Considering the fact that all these refineries put together will really reduce our reliance on exports, what is the current state of these other refineries? Crude oil, or the oil sector, is a major right now. That's a major revenue, source of revenue. So why is the government not considering focusing on getting these refineries to come to, or to roar to life, so we can reduce our reliance on exports and also reduce the inflation rate too?
Well, what you're saying is that we should stop depending on imports.
If we can have these refineries working, will really reduce our reliance on imports. Importation,
exactly. And then we should also aim at exporting, because we used to export petroleum product from here. Because myself was exporting about 25,000 battery tons of HPFO from Nigeria to Switzerland and different parts of the world, in my times in the 90s. So and that was foreign exchange that was coming into Nigeria. So there's every reason to encourage the refineries to work, because it's not every product that is produced that is consumed in country. And most of the products will obviously find its way outside as export. The other thing is that let them be managed properly. And you have asked the right question, why is the government not giving the best attention? We encourage the government to give the best attention, and Nigeria should also expect and encourage the government to give our refineries and our oil and gas sector the best attention, so that we can have transparency, we can have values that we can depend on, in running our country efficiently.
Okay, for time's sake, this is where we wrap it up on this edition of ATN Business on Atlantic Television Network here in the city of Port Harcourt. Thank you so much, Dr. Harry. It's really amazing having you here.
Thank you so much. It's also my pleasure to be given opportunity to express some of these critical business-related questions.
We hope to have you here again soon.
Well, once we're available, we will not shy away from making sure that our experiences are useful to Nigeria.
Okay, so that's it. We are open for advert placement, bookings, and commercials. Stay connected on ATN socials, Facebook and YouTube, Atlantic Television Network, Instagram and TikTok, Atlantic TV Network 1, X formerly Twitter, Atlantic TV Net. Watch us live on our website, atlanticnetwork.tv. Peace and unity are the pathways to progress. Thank you for watching, and good afternoon.